time. And now, to kick things off, very happy to have our opening keynote session. We have the Chief Growth Officer at MindBridge AI, Karthik Manamosi.
Thank you, Connor. It's my true privilege to be here presenting in front of this distinguished gathering of industry-leading CFOs. So Karthik Manamosi, I'm the Chief Growth Officer at MindBridge. Been in the industry now for over 2 decades. Spent my time with SAP for over a decade as a global executive. Worked for Kyriba, specializing in the office of the CFO, and having a real blast working for MindBridge for the last year and a half. So today, we have a 4-part presentation for you. The first part, we will discuss the evolving role of the CFO, the challenges and the opportunities that come with it. We'll talk about the evolving tech trends, which begs the billion-dollar question, is it a weapon or a shield for you? And then we will talk about a modern concept called an AI-powered central insights factory, which is a powerful mechanism for you as a CFO to continuously scan your enterprises for lost revenue opportunities, revenue leakages, and really run a world-class operation. And finally, you'll hear from a good friend of ours, Ryan Mitchell, who sends his apologies, who could not be here due to a last-minute conflict with his scheduling, but he was kind enough to record a video for us so he can share his journey with the platform and implementing the AI-powered Central Insights Factory. So it's no secret. I mean, CFO's role is vastly evolving, and CFOs still remain one of the most trusted partners to the CFO and the board of directors. And the key part of the evolution is from yesteryears, where the focus was a lot on budget and planning, managing performances, and compliance, risk and compliance, so on and so forth, moving to become the business co-pilot, where you are designing the org strategy, bringing new products to market, taking control of the vast data and analytics stack of the company, and going beyond finance like ESG. But I reckon the day and time for CFOs to be seen as a true enterprise value architect has arrived. You're expected to drive digital transformation, drive enterprise leadership, and you're expected to drive and deliver an autonomous finance function through hyper-automation and by leveraging artificial intelligence. So I'm going to fall back a little with our friends at Gartner. So I spent the last year and a half meeting over 350 plus C-suite executives on one-on-one settings, trying to learn and understand the challenges, the opportunities with them. And we also work a lot with Gartner to back some of these anecdotes and insights with actual research. And 6 top trends come to light, right? The first one, the pressure to deliver high margin growth for the CFOs is at a 10-year high. So critical part of this, many of you are doing this already, 62% of CFOs have already cut costs this year. Many of you have gone to the market and you have spoken about how artificial intelligence is going to drive cost savings, finding new revenue opportunities. So that is happening as we speak. The second most critical change in the market is the CFOs today are now in charge of the vast sprawl of data and analytics within your architecture. The data that is exploding in silos with huge velocity, variety, and veracity is now under the remit and leadership of the CFOs. And we're also seeing many CIOs report into CFOs. So Gartner put a value to it. They say 76% of CFOs are now in charge of their enterprise's data and analytics strategy. This is happening as we speak. AI use is mainstream in finance. And I want to make a simple separation here. Because yes, from a thought process perspective, from your board of directors, from your shareholders, the thinking is that AI is here and now, and you are expected to drive huge gains for the shareholders using it today. The reality on the ground tells a slightly different story. I'll give you a couple of data points. One, artificial intelligence projects in production as we entered January this year. There's only 20% of these projects are actually in production, and only 6% of them are at-scale deployments. It's improving, no question about that, but you're not going to find huge benefits for your business if this is not moved from sandbox to production in a big way. That's a problem. The second problem is our ability to measure ROI for such projects. This comes up a lot in my conversations. And when Gartner did a survey, they found out that 57% of CFOs do not even attempt to measure the ROI of their AI projects. 29% try and fail. And only 14% are able to actually measure the ROI of their AI projects. This is critical. We need to keep a myopic and maniacal focus on driving ROI of any investments that we make. The CFO's role beyond finance is well spoken and thought through in the industry. ESG, going beyond the remit. Last and the most critical piece, your workforce. Gartner says only 20% of the finance teams today are digital equipped and digital ready. That number has to be 50% by 2027 if you want to make meaningful strides in terms of deploying artificial intelligence as a weapon to differentiate your go-to-market. So these are the facts as they come in. So that is a critical number. Gartner predicts that 3 to 8% of EBITDA is lost on average for an enterprise due to poor operational decision making, particularly poor financially informed operational decision making. So the number one challenge for all the leaders in this room is how do you take the functional excellence that is driving your lines of defenses and the different organizations, and how do you unify the vocabulary so you can deliver an organizational-wide excellence driven by the same metrics and you speak the same language? That is a challenge. Okay, so where can we deploy AI effectively? And there's a lot of thought process around this, right? If most of you remember when we had the mobility explosion into the market, people are trying to replicate the website experiences onto a mobile phone and how it didn't work, because you really have to be mobile native for it. And this is an opportunity. This is an opportunity for you to reconsider the architecture of your teams. Let's talk about where is AI most effective, right? So I have a simple X by Y axis, right? On the X axis, we're talking low to high complexity of the problems you can diagnose using artificial intelligence. And on the Y axis, low to high materiality to your business. So if you look at how most of the AI projects are deployed, we pick simple automation. And we say, well, invoicing now has to be automated. So no question that needs to be done, but it produces marginal productivity gains. It's not a game changer. It's a shield. Okay, point two. Things like demand forecasting, expense forecasting, medium complexity to deliver, medium impact to the company. And one of the biggest remit for modern day CFO is managing risk and compliance. So where does that rank? There's no doubt this is one of the most complex things to do in terms of discovery and finding meaningful risk errors and anomalies. But without context, without your ability to use the information to drive a better business, you're not tapping into the value. It's more of a look back for you. So where is the biggest remit and return for artificial intelligence? Undoubtedly, on the right-hand corner, profit variability. Understanding things that are happening in your organization. Where are revenue leakages? Where are lost revenue opportunities? Where are cost arbitration pieces that you can work on? All of that makes it very important to really look at the profit variability as a key area of focus. So it's got essentially finding the biggest variances using the power of technology, attacking them, and then tapping into the gains is the best way for you to deploy AI, right? Keep some of these things in mind. I will readdress this back a little bit later in my presentation. Okay, so where are the traditional stacks falling short? One of the reasons why we're not able to keep pace with the promise of technology is that a majority of your budgets go into status quo. 95, 99 cents even of a dollar is just spent on maintaining existing systems and moving them. That is a problem, right? And when people hear artificial intelligence, they immediately think ChatGPT, Grok, Gemini, Chatbot, Copilot. There's a lot of differentiation that needs to be made between them. So if you look at the traditional data stacks, your traditional systems, they require you, like your business analytics, data warehouses, they require you to build a warehouse. They require you to load the data. You need to clean the data. You need to perform ETL services. Then you build dashboards. And all of this takes a lot of time, effort, and money. And tens of millions later, and you lost a year, year and a half, what you're finding is that those insights are not actionable. They're not granular enough. They lack context. That is a problem. Now, Gen AI has some promise, particularly for productivity, particularly in areas where you have insufficient data. They are helpful, but they also come with their own set of problems. IP problems, very high number of false positives, false negatives that can affect your outcomes, hallucination, biases, and so on and so forth. And then we have the supervised artificial intelligence. The supervised artificial intelligence requires you to train the data. And what happens when you train the data? You're literally transferring your knowledge onto the software and the algorithm, and you want them to perform the job. Here's the problem. You're only checking for known errors. What are the things you do not know are happening in your organization? And we call them the unknown unknowns. Now, when you are training your software, you still have the same blind spots. If you were making mistakes, now you're guaranteed to make them at scale and more consistently. So what you really need is a technological advantage. And that's where unsupervised machine learning comes in. So I'm going to talk a little bit about this and the advantages that this can bring to the table. So think of your enterprise like an iceberg. 90% of your problems are beneath the surface. Now, you will discover them eventually, but the key is to discover them at a time when then you can act on it. So think of this whole process as analysis, pointed investigations, and executive decisions. Today, we are spending a disproportionate amount of time on analysis, very little time on investigations, and even little time on executive decisions. If you can flip that, you have an advantage. So the unsupervised machine learning, it can learn, can evolve. It can just work through the data and not just find the known errors that you can normally find, but it also tells you things that you do not know are happening in the organization. How do they do that? By risk ranking every transaction from grounds up, by providing a connected view of your enterprise, by integrating the data, and by going from handshake to insight in as little time as 6 to 8 weeks. How is that possible? Because you don't have to build the warehouses to load the data. You don't have to train the data. They are able to find and process anomalies, errors, and detection, and it is continuous and it evolves. And you can further fine-tune the efficacy of these algorithms, and as I'll talk about in a bit later, using your own business rules and statistical models. Okay? So this is a fun test. I was recently presenting at a Financial Executives International Conference. We had over 200 functional executives across the 3 different lines of defenses. And I told them, well, it's a fun test here, and they're allowed to poll. We have 9 rows of data. So each row, A through I, has 2 data points, X and Y. I told them, find the anomalous row. Is it A, is it D, is it H? Help us find this. So they went through the process. 40% of them said it's row A. The actual answer is row C. And none of them said row C. Now, this is something called the banana test. When you start to plot these different data points on XY axis, the one anomaly that stands out, the one dot that stands out is the anomaly. And I asked them the question, well, if we cannot manually determine from 9 rows the anomaly, how do you do that on tens of millions of data sets on a daily basis? So this is where artificial intelligence can certainly help us move the conversation along. So this is not the only way to do it, but this is how we chose to do it at MindBridge. So we have combined the power of unsupervised machine learning, and we have added to it the statistical methods as well as your traditional business rules to it to kind of fine-tune the whole process. So in terms of our journey as a company, so we started as an audit control platform. So we're trusted by KPMG and 5 out of 10 major audit platforms. And our movement into the enterprise was quite organic, right? So the KPMG and the audit firms would present the findings to the board of directors, and the board of directors would say, hey, this is granular, actionable insight. Why aren't we finding the same things? Why is it that my auditor knows more about my business than I do? So can we adopt the same platform and do it? So we went into the world of enterprise, started helping the internal auditors close their books on a monthly basis. And the internal auditors recognize something. They have small budgets, small teams, and they're literally fighting waves on a beach all day. So they can do that, or take a portion of the budget and go inside the enterprise and address the problem at the root cause, which is exploding data, outdated system, processes, people, risk metrics, and controls. And that's how we got into line of defense too. Started working with controllers, FP&A, chief risk officers, and then the CFOs realized something fundamental. These are good insights, but why do I always get it after the fact? Is there a way I can get to the problem as they occur? And that is the whole journey for us, and today we work through the 3 lines of defense, is literally blurring it, right? Okay, another common misconception. So I spoke about misconception, sorry, my English is failing me right here on stage. But in terms of how to think of artificial intelligence and the power and impact it can have on your enterprise, I spoke about think of it as a different architecture, a different way to deploy the technology, which would impact your teams, the processes, so on and so forth. Now, you've been sold this day in, day out. People talk about the power of co-pilots and chatbots and agentic AI. So if you start looking at it, like on the left, you have static processes, on the right, very adaptive. And you can see different metrics in there. And to the right is your truly autonomous organization. And you have them across these different pieces, right? And if you see, where is your chatbot? It's still manual plus. It's not a game changer. It's in there, it's been packaged, it's added. It does not fundamentally change the way you're deploying technology to change your results. It's an add-on for productivity. You look at co-pilots, also very close to the manual spectrum, right? Agents can be the solution if deployed correctly. And this could accelerate your move towards autonomy, all right? So keep that in the back of your mind as we go through the next stage. So what does it take, putting all these pieces together, what does it take to supercharge your enterprise performance? Think of this new architecture thing, right? You got to get 5 things right. 1, unify the data. Your financial systems, non-financial systems, structured data, unstructured data, GL, subledgers, feeding systems. What you really need to do is unify the data. It's a lot easier with partners like Databricks. You'll hear Ryan from Chevron talk about how he's able to get the data integrity going using Databricks and other solutions in the market. And we can connect to all these systems ourselves as well. Second part, connected view of the enterprises. So you need to look through. One of the conventional problems with systems is that your process exceeds systems. If you take the entries in your ERP or your system of record as truth, then you're not going to be able to unearth the inefficiencies and the gaps, because someone is entering data into these systems. And we did an interesting benchmarking exercise to see how often is fraud prevalent versus error in manual entries. So you're more likely to have 0.05% occurrence of fraud, but your manual entry could be 1 to 2%. So every 100 fields you're keying in, you're likely to make 1 or 2 mistakes. So that's the reality. So once you've done that, and you found the financial integrity assigned to it, now you have to think about how do you integrate your workforce and your workflow, and then that's how you do meaningful change management. So you have to think through this, and you need to go through this, process by process, really. Okay? Okay, so why do CFOs need an AI-powered central insights factory? It'll be good to have a MRI scan of your enterprise, looking at the processes consistently, and to figure out where are leakages, where are gaps, and to address them proactively, lock in the gains, and then do a rediscovery, go deeper, and grow and scale horizontally across the company. So I'm going to talk about how we do it. Obviously, it's not the only way to do it, but because we have Chevron talking about it, I thought I'll just talk about our philosophy as to how we do it. Okay, so tying everything back to material results is the only way to do it. As a CFO, there may be different ways you go to market, you package your solution, you connect with the customers, but the underlying financial processes, there's a lot of commonality to it, and you're working through a top line, bottom line playbook. Okay? And then if you take those critical processes, order to cash, record to report, procure to pay, people, assets, you have all of them in here. So today, what happens with your 3 different lines of defenses? There is an explosion of data, in many cases doubling every 4 to 6 quarters. There are semantic problems. When you have 20 instances of ERP, you don't name the fields the same way. That is a problem. Collaboration and communication between your teams is a problem. There are a lot of functional KPIs which are being optimized at the team level, but what you're trying to do is get that cross-collaboration going, trying to unify the vocabulary. Outdated system, outdated processes, outdated control frameworks. All of these are real issues. And what we have is a very complex enterprise environment, and remember, now you are in charge of it. 76% of you own the DNA strategy of your company. So what you really have to do is, how do you cut across? There are over 330 plus SaaS applications in your environment and thousands of decentralized tools. So how do you cut above and run an efficient operation? So the way we do that, let's take, for example, procure to pay. So your procure to pay classic process goes from requisition, purchase order, goods and receipt, invoice, payment, and credit. Okay? The first way to do that is doing the single ledger analysis. And by looking into pieces like your purchase requisition, you're going to find things like pricing issues, duplicates. Or you can look at vendor invoice and look at incorrect amounts and so on and so forth. So that's one cut of insights that allows you to take a look at things. Now you have to do better, get to the connected view of the enterprise. You can start combining these ledgers. Get your requisition in order, take a look at procurement, do a 3-way match, or do accounts payable or dispute resolution. So when you combine the views of these ledgers, you get a brand new set of insights. I'll give you an example. It's a leading automotive manufacturing customer of ours, and they were very keen to understand how efficient is their liquidity process. And they said, can you run this analysis for us on the invoicing bit? So when we ran for a term period, we found that the invoice to ship gap was 13 million, and the delayed invoicing number was 139 million, just for the term. And I said, that's exactly what we need. We need to work on real material problems. It's not about technology. It never was. It's about running a better, efficient process. So moving forward, what we did is, because we had over 8,000 checkpoints built into our software platform and 250 control points, based on our work with KPMG and the audit firms and other major enterprises, we decided to build an AI use case library to make consumption simple, right? So in this case, we combined, for example, your invoice and payments, and we created a use case for accounts payable. or a procurement use case by combining a requisition and purchase order. And if you look at it, we have across the major financial workflow, order to cash, record to report, procure to pay, people and assets, we have built over 14 off-the-shelf use cases. And what do? They continuously work towards looking at the risks, control gaps, and inefficiencies tied to them. The overall idea is, think of your normal recipe for solving any problem. You would build a control, you'll deploy a control, you'll test the control, deploy a control, and you try to maintain a control. And some of my conversations with some of the enterprise brands, they never retire a control. And I'll talk about a single customer. I wouldn't name the customer. But they said for their SOX alone, they have 2,800 controls, 6% of which is automated. 94% of them are manual or IT assisted. And they've been building controls since 1970, never retired one. And I asked them, how confident are you that people haven't figured out a way to work around your controls? They said, I'm not. So this is where someone like MindBridge can be very effective, a brain for the operation, right? So this is your possibility to move from monitoring to continuous auditing. Trust has to be rendered every day. The trust has to be rendered on a daily basis, which allows you to make better decisions, more confident decisions, more executive decisions that can contribute towards your top line and bottom line. So what we have done is looked at some of our customers and we said, what are the top 10 key outcomes? So if you choose a use case, what are the most common insights we can provide you? And we built a taxonomy, which is very helpful. For example, some of our customers, if they purchase the accounts payable, they enjoy, looking for duplicate vendor payments, vendor concentration, things of that nature, right? So we kind of made it easy, packaged, and ready to go for the market. Now, the beauty of this whole use case library is you can retrofit them into any of your existing transformation programs. You'll hear Ryan from Chevron talk about risk transformation and business process transformation. I was recently at Gartner presenting a session, and I had Jones Lang LaSalle, and they were talking about how they're using us for travel expenses and AP audit from a business process transformation perspective. So you can retrofit these use cases into your existing transformation programs. And which brings us to the most important point, driving ROI. So we have a framework that we work with our enterprise customers to help them measure the effect and efficacy of these programs. Assurance is a given. Your ability to look at 100% of the data, 100% of the time, and use it to make smart decisions, trust rendered on an everyday basis, and have real confidence in the data that you see in front of you. That is important. Monitoring to continuous auditing. That's a given. But then we have to talk about the operational uplift. Where are the leakages? What are the lost revenue opportunities? What are the cost-cutting arbitrage availability for you? And then we talk about the value framework. The value framework is value creation, new value created. We call it the unknown unknown, things you did not know were happening in your company, and we're able to spot it. I'll give you one more example. Major oil and gas company. So they took our platform and they pointed it towards their AP invoices on a lazy Sunday afternoon. And what they found was one of their partners was billing them in the thousands, while the approved rate was in 100. So they found 8 invoices for 2.8 million, which should really have been 280K. That's an unknown unknown. You don't know this is happening. You'd only do it when you do the connected view of your enterprise. When you compare the invoices to what is an anomaly to their previous ones, and then go to the contract system to see what was the rate. That's how we get to it, right? The second part is value capture. These are the things that you're doing, the known knowns and known unknowns, duplicates, manual journal entry errors, incorrect payment terms, et cetera, et cetera. And the last part is value destruction, preventing it. Like when is value destroyed? When your trust is destroyed. So all the scandals around risk and compliance that opens the door for scrutiny of your shareholders and lost trust, it's an area. The other way to look at this value destruction is actually training your team to do things differently. And that's a unique take on it. Because if you're used to doing something, you forget that you have the pain. You get used to the pain. Now, artificial intelligence, when deployed correctly, is a new way to reimagine the problem, a new way to architect your organization and get an unfair advantage as an outcome in the process. So, how do you go about it? We spoke about the power. One of the major limitations for you to go really fast, to get your projects into production, to measure the ROI and get your team behind is fear. And you have to promote the concept of human-centric artificial intelligence because people think their roles are being eliminated. In all fairness, it has been since the beginning of January. So getting your team behind is going to be a very important aspect. And beyond the culture of continuous improvement and architecting your organization differently, you have to also look at what are the most pressing problems in your company. Jog your memory back to the last board meeting, to the last steering committee meeting. Did you have a problem with margins? Did you have a problem with your vendors? Did you have a problem with your expenses, payables? Is it gross to net? Or is it your taxes? And you can pick one or two meaningful problems and the use cases and start deploying them effectively. So I did show you the use case library, and we also have an ability to configure and deploy a use case really fast. So the red hot one, which will soon be added to the library, is taxes. Indirect taxes, tariffs, use tax, sales tax. There's a lot of opportunity there because you are coding your invoices, and it changes by jurisdiction. And we are working through our partners and customers to get to the other side, right? So once you prioritize your high-value use cases, you work to standardize, optimize, and then innovate on top of it. Which brings us to the AI-powered Central Insights Factory. So there are different components to it. It always starts with the data. And you'll hear from Ryan from Chevron, and he talks about how Databricks has helped us accelerate this journey by ensuring the end-to-end security posture, the quality of the data using the Databricks, them delivering the data integrity, and then we are building on top of it the financial integrity, and based on that foundation, we can redo your control framework, your process framework, and get moving effectively. And what it all leads to is you have the brain, the center of your organization, an AI-powered central brain, and you're able to cover different processes from order to cash, procure to pay, record to report, people and assets, and you unify your people and you unify your systems, and you're always scanning your enterprise for things like unknown unknowns, known error detection, and continuous auditing capabilities. Okay? So I'm going to have Ryan talk through the recording to all of you to see how he has put the whole pieces together. Okay?
Hi there. I hope you're all enjoying the conference, and I'm sure that Karthik gave me a warm and rousing welcome. I'm Ryan Mitchell, and I lead Finance, Data, and Insights Organization and Transformation efforts at Chevron. Chevron's one of the world's largest integrated oil companies, as many of you probably know, operating in more than 100 countries around the world, processing billions and billions of both dollars and transactions across our global systems every single day. Our mission is clear, and it's been the same ever since I joined here, to deliver affordable, reliable, and ever cleaner energy. While that mission hasn't changed, the role that finance plays in enabling it certainly has. We're held to higher standards, increased accuracy, effective risk management, and driving the business on performance are all things that we need to be able to do today that maybe we weren't asked to do in previous iterations. Now that challenge excites me, and I'm sure it would excite a lot of you, but I'm here to tell you that it doesn't come without challenges. Challenges like complexity, like scale, like data. We all think today of data as an asset, but data can weigh on you quite a bit when you have multiple ERPs running 24/7 around the globe, when you have trading systems that integrate with procurement systems, that integrate with inventory systems, all just to get down to that single financial transaction. But we're more equipped today than we ever have been, thanks to a strong internal team and key partnerships. We're not just expected to report on what happened. We need to advise on what could happen, what should happen. How do we grow? But also, how do we identify risk? And how do we ensure that our blind spots are as small as possible? That's why I'm going to talk to you today about our journey with MindBridge, why we turned to AI, and how we found this solution. And it's a story I love to tell because it's somewhat of a unique one. Probably 3 years ago, I was running around our office asking any data scientist I could find, would you take this big chunk of data and just tell me what looks weird? That was my question. Sounds simple. But to a person, they all said, well, if you score it, well, if you give us a test script. And they didn't understand that I wasn't looking for a right or wrong answer. I wasn't asking them to tell me if these 5 things were correct last month, tell me they're going to be correct this month. I wanted to surface the unknown unknowns, the things I didn't know I was looking for, or that a human eye wouldn't naturally pick up. A missing tax rate here, an extra 0 there. And so, as I was asking that question repeatedly internally, I was at a conference, much like many of you are at today, and I asked that same question to a couple other vendors that were there. And for the first time, someone in a MindBridge polo was looking back at me and said, that's exactly what we do. And it was like, in that moment, he finally got me and I got him. And it was like, oh, that's amazing. Let's get together and do a pilot. 3 years later, and here we are talking about what we have deployed and what we are deploying. We like to call it our centralized insights factory, powered by AI. Using MindBridge, we ingest as much data as we can get our hands on, which is quite a lot. Transactional ERP information, operational data, and we are talking tens of millions of rows at a time. And what's really special is not just the scale that this enables, but the fact that MindBridge uses unsupervised machine learning models, an ensemble AI, if you will, to detect anomalies and surface oddities. That's exactly what I was looking for. But it doesn't stop at that. They also provide statistical models and business rules, and allow us to curate our own for our data. If we want to create a rule, we can build that into the solution and make it ours. There are not many tools that give you the out-of-the-box capability, but also the customization that I've seen in the space like MindBridge does. So our transformation journey really started with a blueprint. How can we bring AI to financial controls, internal controls, and reporting and analysis? Now, step 1 was the easy part. It was finding the right partners. And while this conversation is about MindBridge, I would be remiss to not shout out Databricks, another fantastic technology partner, who allows us to seamlessly script and flow data from our ERPs into a centralized storage location, and then directly into our MindBridge solution. We have been able to get roughly 50 million transactions loaded from source to sync within 3 to 4 hours. And that was something that just a couple of years ago was taking us days, if not weeks, to be able to do. So now that we have this plethora of data, what are we going to do with it? The fun answer is we can do anything we want with it. We can look for anomalies, we can look for fraud, we can look for risk. But we did have a plan. Number 1 was, how do we redesign our controls and our risk profiles based on AI and ML-based controls? No more sampling 5-10% of a population. We want to look at everything. And we want to look at everything on a risk-adjusted, scored basis. How different is this transaction from this other transaction? MindBridge will tell you. So the first thing that we started with was manual journal entry controls. Attempting to move from a dollar-based threshold, very static, very structured in nature, to a risk-based approach. Why should we look at the $20 million transaction that gets booked every month and ignore the $14 million transaction that was booked on a weekend and ended in 000 and was booked by a user who only booked 2 other entries that year? Those are the types of analysis and explainability that bringing our data to MindBridge and leveraging this analysis is really providing us. We're using it to optimize month-end close. We can load data and review it before we book any of our post-close entries and after. We can do balance sheet reporting, variance analysis. Again, booked a wrong contra account? MindBridge will flag that. It allows us to not necessarily see what's wrong, but to allow our people to focus on the areas that need their attention with a massive scale and pinpoint accuracy, and in the fraction of the time that we used to do it manually. We're doing SOX assessments and risk scoring to be used in future year planning. We're piloting continuous auditing, where we can do general ledger health checks across all of our businesses around the world. And we're discovering through this analysis prospective areas for automation and AI enablement further, to not just identify the opportunity, but actually close the loop and capture that value. Now, beyond internal controls, we're also using this to optimize many of our tax processes. I know, tax is one of the most exciting things we can talk about, but at Chevron, and I assume that many other US conglomerates, we have something called indirect tax, excise tax, sales and use tax, whichever you want to call it. And this is not like paying your federal income tax, or even your state income tax, or payroll tax. This is state by state, jurisdiction by jurisdiction, county by county, activity by activity. And so for us, it makes a big difference if we're paying 7% or 1.5%, 3.5% or 0%. And that's the level of complexity where we have to review every single transaction, whether we're selling or buying, that we make, and then accrue that tax to eventually pay out to a state regulatory agency. Now, because this is so voluminous and so complex, once again, we resulted in sampling. No longer. Now we can take every transaction that our procurement team puts together, an invoice that we receive, and use matching algorithms, keyword searches, anomaly detection, combinations of cost centers and accounts and jurisdiction codes to actually propose what the tax rate should be. No more over accruing or overpaying because we didn't know or we didn't look at it. And also no more under accruing or not paying because we didn't know and exposing ourselves to fines and penalties when the regulatory agencies eventually come audit us. It gives us increased confidence internally with our board, but also with regulators. It's proving trust, and it's proving it in a way that is not just advantageous to us, it's advantageous to people. It's less wasted time on mistakes and errors and more time on ensuring correctness. So I hope you can see the requisite value in those few use cases that I rattled off. But I do want to touch on just one more thing, and that's what excites me the most about AI, which, as anyone can guess, is the human element, the impact that it has to our employees, to our customers, to our partners. We're empowering people to do more within their day, but exert less. We're empowering people to get, quite honestly, the grunt work out of the way so that they can focus on the problem solving, the strategic investments. We're reducing audit and compliance costs. We're giving people a single place where they can go get clean, reliable data. And we're increasing confidence throughout the company that what we're able to do does not stop with what we have just done. It continues to scale. And as I tell these success stories internally, I can assure you, more use cases keep coming. People are interested, they want to know, if you could do that, why couldn't you do this? And for someone who's been in finance for 20 years, but a self-proclaimed technologist for the last 7 or 8, that's music to my ears. So in closing, I think the message that I really want to leave you with is AI is no longer just a buzzword or a future concept. It's here, it's delivering results, and it's redefining how we can think about financial oversight and compliance. Chevron's is just one journey, but one of my favorite journeys, and a proof point nonetheless that a centralized AI-powered insights factory, a centralized risk-based governance approach can help CFOs eliminate blind spots, unlock efficiencies, and enable financially informed operations for decisions at scale, for changes to process, and allow us to focus more on growing the business and supporting our executives, and less time worrying about data wrangling, and really getting us to a point where within a day, we can complete entire months' work of processes. To me, that is the type of exciting stuff that a CFO or other financial leader dreams about working. If you want to learn any more, please look me up on LinkedIn. I'd be more than happy to chat with any of you, and I encourage you to ask Karthik and the MindBridge team as many tough questions as you can when you get back to Q&A. Thank you so much.
So I want to thank, yeah, I'll let him know there was applause in the room, but I want to thank Ryan for all the hard work you put into recording the video for us. So I think we're at time. I'll leave you with this. So if you'd like to know how to kind of start your journey towards an AI-powered Central Insights factory, please do come down, have a chat with us. We are here with our team, Stephen, Matthias, our CEO, CFO, Joe, and a few others are here. And we have had real traction in the market. Since January, we've had some really good brands like Mars, Colgate, Jones Lang LaSalle, Chevron, you heard the story here, State of Georgia. They've all embarked on this journey. We're very excited about this. It's a new way of looking at the organization and the power of artificial intelligence by emphasizing the results and outcomes more than the technology itself. So it's been a real pleasure and honor in front of you, and I want to thank you once again. Appreciate it.